Um, Welcome everybody to the latest edition of Red into Black. Today we're joined by Josie Gangemi, who's the Director of Tax Debt Solutions Australia, and she's going to talk to us about how to actually deal with the ATO. But before we get underway, just a couple of housekeeping items. You'll find at the bottom of your page there's a Q&A function and also a chat function. Feel free to use those as we go through the webinar. And we'll come to those questions at the end of the webinar. So welcome again. Welcome, Josie. Tell us a little bit about what you actually do.
Well, I help people that have tax debt, essentially people that have are running a business, whether it be a sole trader or a company, and they find themselves in tax debt that they can't seem to manage. So I help them by providing them with an analysis of their tax debt, and I also let them know how much I can potentially reduce their debt by if there's grounds, obviously, for a reduction. And we do that by way of applying a remission application to the ATO, and we also negotiate long-term payment arrangements. So that's what we do. And the difference between, I suppose, us and an accountant is that we just complement the work that an accountant does by providing this sort of specialised service.
Sure. Okay. And given how topical the ATO is sort of becoming, particularly in our space, in the insolvency space, it's probably good timing that we actually get you on board today to talk a little bit about how to actually deal with them. So in terms of, so that's what you do, but who actually refers work to you? What sort of professions and what sort of people actually refer clients to you?
So my greatest referrer are accountants. So they may have already made an application to the ATO that's been refused, and they'd like me to have a second go at it. Or they may not have had a go. They just don't want to do that side of the business, and they pass it on to me. And I find that that's a better arrangement for them, because if they do get a refusal, it often affects their relationship with their client. Whereas if they hand it over to me, it's an arm's distance sort of transaction. And then I return the client to the accountant in a much better position. The other industry are brokers, definitely brokers that are trying to do a deal, and the finance doesn't service because the tax debt is too high. So we'll look at a remission application for those tax debts as well, just to try to reduce it and help that finance deal cross the line.
Yeah.
It might be lawyers as well, so family lawyers, lawyers that are, deal just insolvency lawyers. And other industries, business brokers as well. So ones that are trying to sell a business that might have a tax debt, and they're just trying to get them into a better position before selling the business.
Yeah, because this area, can be very stressful. I would have thought, dealing with the ATO, it can be stressful for the client. It can be stressful for, say, the accountant. I know a lot of accountants, we do a lot with accountants, obviously, but a lot of accountants are exceptionally busy these days, just trying to cope with the general day-to-day compliance type aspects of their clients' businesses. So I suppose this service of dealing with the ATO, and given your experience and knowledge and also probably your contacts, I would have thought, with the ATO, it's probably a good add-on service to those people that refer work to you.
We do have contacts, absolutely, but we try not to use them. I mean, we deal with the ATO all day, every day. So we've established some really good relationships just with people that answer our calls or pick up our applications. So we haven't needed to escalate anything in recent months, but things definitely have changed at the ATO. They've become a lot harder to deal with. I think they've changed authorisation levels where people were a few months ago able to authorise payment arrangements up to $1 million. Their authorisation's been reduced down to $500,000. So everything's getting escalated. They're really enforcing that 28-day service standard. Previously, you could circumvent that quite easily. So things are just taking longer to happen.
So when clients come to you Obviously they've all got ATO issues. So what sort of communication are they getting with the ATO? I mean, I assume that a lot of them that come to you have got, they've probably received a letter or something like that. In the current environment that we've got, what does that sort of look like?
So currently the ATO have issued, since March, they've issued about 50,000 director penalty warning letters. That's really got a lot of people with tax debt concerned about their position, and they're doing things about it, whether it be going to their accountant or their lawyer or to me, to help them address that tax debt. They're also reporting to the credit bureaus as well for any debts that are over $100,000 if that debt is not managed and they haven't heard from the taxpayer for 90 days. So they're the sort of things that are happening right now. The step demands are not really issuing like we've seen them issue in the past. They're issuing very, very slowly and very carefully, very carefully.
So in terms of what the ATO is focused on, do you see, given that you deal, every day with these sorts of issues, is there any sort of common thread of what they're currently focusing their attention on?
Compliance is a big one. So they're definitely following up people that haven't lodged. That's been something I've seen quite a lot of lately. And they're also negotiating payment arrangements for people. They're definitely not doing the 3-year ones anymore. They've stopped doing that. They're really trying to push everyone into a 24-month payment arrangement. I've seen a lot of that. And they're talking a lot about financial information. So getting people to really substantiate how are they going to satisfy that payment arrangement, the instalments, which is a great thing because we don't want people in payment arrangements that they can't afford.
Yeah, okay. Are you seeing any particular industries as such that they're concentrating on?
Right. Yeah. Well, look, I don't see construction. I think they're just sending them out to everyone that has debt, obviously. But the businesses that I see more of recently, I think that's more your question, would be construction. Definitely, a lot of construction businesses, a lot of builders are finding that now they find themselves at the pointy end and they really can't pay that tax debt off even over 3 years. So they're considering other options such as yourself, small business restructuring, those sorts of things. So yeah, I'm seeing a lot of that. Unusually though, I am seeing some industries that did really well during the pandemic. I've seen real estate agents struggle with paying back their tax debt, and also psychologists. So which is really interesting because they did really, really well during the pandemic. So I think they just forgot to put money aside for tax debt.
Yeah, well, that's I've got to say, a lot of the clients that we see have got exactly that sort of problem too. So yeah, I can understand. But it's interesting that those industries that have actually done well, you're actually seeing a bit of activity there. So it's fascinating. What sort of debt levels are you generally seeing as well?
Anything from 100,000 to tens of millions, to be honest. Some are quite high. So it is concerning. A lot of people during the pandemic just were not able to pay their tax debt, and the ATO weren't chasing them. So in part, I believe the ATO are responsible for the tax debt. So they are showing a lot of flexibility around that now, which I think is only fair.
So are you saying, so given the size of these debts, are you getting more inquiry coming to you because, of these, 50,000 odd pre-director penalty notice letters that have gone out? Has that pushed things along? Are you seeing that activity by the ATO is trying to encourage either communication with the ATO or at least trying to deal with it? Is that what we're seeing here?
Definitely. Prior to those DPN warning letters being issued, there was definitely not a lot of movement going on that really has got people, looking at their tax debt. I've had a lot of people that I've had to negotiate for that have had director penalty notices issued or warnings that director penalty notices will issue. So that's definitely moved things along really well. And I expect that it'll continue to do so as they increase those DPNs and also as they increase issuing those stud demands.
Have you seen, one of the things that I understand the ATO can do is report debt to the credit reporting agencies. Are you seeing many of your clients come to you where that might have occurred, or are you seeing any activity in by the ATO doing that?
I have seen warning letters in that regard. So they're definitely receiving warning letters. However, as soon as you actually address that, so they receive a warning letter, they've come to me and I've been able to engage the ATO and negotiate on their behalf. And so they won't be reported to the credit reporting bureaus because they're managing their tax debt. So I think a lot of people that receive that warning letter definitely have either been to a specialist like myself or their accountant to address that and to stop that report happening.
Yeah, because it's that could create quite a problem, I would have thought.
Definitely. Yeah, very damaging.
Yeah, absolutely. So in terms of dealing with the ATO, say an accountant, their client gets one of those letters or some form of communication. In fact, in our travels, talking to a lot of accountants, quite a few of them have got either these late lodgement letters for their clients, or failure to lodge letters, or even audits that are actually occurring. What's the best way of actually dealing with that? What sort of advice could you give?
Well, I think if you received a letter to say you need to lodge, then you need to have that conversation with the accountant and get everything up to date. Compliance is probably more important than payments for the ATO. They want the debt crystallised so they know what they're dealing with. And you can really not make any decisions unless you've actually crystallised your debt. So that's the first thing. And then I think you need to decide what you want to do and what is possible. What is possible? Can you pay your debt off in 3 years? If you're not able to pay your debt off in 3 years, you do need to consider other options, and with someone like yourself, because there is no point entering a payment arrangement and putting yourself under that sort of pressure only to have to consider other options later on down the track.
So I mean, that's a good point. So let's say you're successful, you get a payment arrangement in place, and then all of a sudden either the circumstances of the client change, or they just can't afford to meet that payment arrangement. What should they do then? Because my understanding is once you miss the payment, the payment arrangement sort of is void from that point onwards. Is that
right?
Or?
So I always advise my clients that if they can't meet the payment arrangement or their ongoings while they're in a payment arrangement, they must contact me prior to defaulting and I'll manage that for them. Obviously, the first thing I do is find out why they're not able to meet it. Can they continue have they got an asset that they can sell so that they can get back on track? So sometimes it's just about, I had one recently that was in a payment arrangement. She had a client that went into liquidation and she couldn't meet her March BAS. So I renegotiated with the ATO the payment arrangement, and she was able to pay that BAS about 3 weeks later. So rather than default, I was able to contact the ATO. I was able to ask for that payment arrangement to be cancelled and renegotiate another one. And that's just much better on her profile with the ATO.
So it's like what we tell a lot of our clients. The communication is the key. Surprise. No one likes surprises. So I know that sometimes it seems a bit scary, I think, for some people to say that they can't actually do something. But your recommendation is get in early and the results are a lot better.
Always get on the front foot. Always be upfront. I think you really can't lose as long as you're upfront with the ATO and you let them know that you don't have your head in the sand. You are, you've got things in place to make sure that it's managed.
Okay. And so, in terms of the sorts of payment arrangements that are there, so let's say a client comes to you, they've got a fairly large tax debt, they might have some penalties and interest and things like that. What does a typical sort of arrangement look like these days?
These days, it's 3 years, because obviously the restrictions, the pandemic, is over, but we didn't go snap right back to pre-COVID days. Businesses are still really struggling. Public confidence is down. So people are obviously, inflation, the cost of living is up. So people are scared to spend. So businesses they're still not doing very well. I spoke to a restaurant owner the other night, and he was experiencing the same. Said, he's changed to events because he just doesn't have the people coming in like he used to. So, yeah, things have definitely changed. So people need the ATO to be as flexible as possible and understanding as possible. So we're definitely negotiating 3 payment arrangements currently. And it may take even longer. Businesses sometimes we need to take things in stages, because it's not just a quick fix, one payment arrangement and they're going to be out of debt. Sometimes it's about having that long-term relationship with someone in their business and seeing them through that journey.
Sure. And so it sort of raises the question about about getting remissions of primary tax debt. There are some there's some conception, I suppose, that you're able to ring up the ATO and tell them your financial circumstances, and it may very well be that the pandemic has had a major impact on your business, and getting a remission of not only penalties and interest but also primary tax debt. Can you comment about that?
Absolutely, I'd love to.
Yeah.
Well, it is a unicorn, so they do have a team that handle release applications, but it is so difficult to get. You really need to be possibly, at the end of your, close to the end of your life, where there's no way you're going to be making any more income. You can't be trading and ask for a release of your debt. You literally have to be, unable to put food on the table, So if you're still trading, you won't get a release of your primary debt. You will need to consider an insolvency event if you'd like that core debt, compromised in any way. But while you're still trading, the best you can hope for is a remission of interest and penalties, and that needs to be done by a specialist. I highly recommend you get a specialist to do that, and an accountant's not always a specialist. So just keep that in mind. That's really important, because it needs to be done properly the first time. Otherwise, it can be really difficult. I've had a few that have been refused by accountants, and I've been able to have them subsequently approved with my application. But it's always much more difficult to convince the ATO to overturn a decision that they've already made.
Yeah, it's difficult. I suppose from a formal insolvency perspective, you're really talking about a voluntary administration, a deed of company arrangement, or potentially a small business restructure really has been the only mechanisms from a formal insolvency perspective that you could use to reduce primary tax debt.
That's definitely your field. It's not something that I'm ever involved in.
So let's talk about the other one. So we've had 50,000 pre-director penalty notices actually issued. Can you sort of just comment about maybe the difference really simply between a lockdown DPN and a normal non-lockdown DPN?
Okay.
What they actually mean and what you can do.
Okay, I'll try not to balls this up. So a lockdown DPN is essentially where you will be personally liable for your debt, even if you do go into an insolvency, wind up the company and liquidate. The ATO can still pursue you personally. That's a lockdown. The standard is where you're given the opportunity within that 21 days to seek to put the company into liquidation.
Okay.
And that will absorb the entire debt.
What creates a lockdown DPN?
A lockdown DPN is when they haven't lodged their liability within 90 days.
Right.
So if it's outside of 90 days, the DPN will be locked down.
Right. Okay. So
that's why compliance is really important. You know, if you can't pay, you lodge. You need to lodge, because if you lodge, then that lockdown, you'll still have the opportunity to liquidate the entire debt.
Yeah. Okay. Yeah. So basically, we're talking about lodgements. So even if they can't pay, lodgements are critically the key. Will the just to go back a step, will the ATO negotiate a payment plan where the lodgements aren't up to date?
No, never. No, definitely not. You might get the rare occasion where they'll negotiate if there's an income tax return that's outstanding, as long as you can assure them that income tax, they'll experience a loss, and that income tax return, once lodged, won't increase the debt. But certainly, I've never seen it done with a BAS or an activity statement that's outstanding.
Yeah, yeah, and they're probably the main lodgements that most companies would have, I suspect.
Yeah, yeah, that's right. That's right.
So you get a client that comes to you with, say, a DPN.
Mm-hmm.
What sort of options are available to them?
Yeah, so we treat them like any other client. We try to explain to them that the DPN is really just the ATO letting them know that they will pursue them personally if they don't address the debt. So a payment arrangement addresses, like, if they get a DPN and it's a standard DPN, the ATO will negotiate a payment arrangement, and that satisfies the DPN. So the DPN is not, it's a parallel debt to the company debt. So it's satisfied by way of payment arrangement. Lockdown DPN is different. However, a lockdown DPN is not satisfied by way of payment arrangement. I think they'll still negotiate a payment arrangement with the lockdown DPN issued. However, if you default on that, they will continue to pursue you personally.
Yeah, yeah. Are you saying, have you seen situations where maybe the ATO is taking security in relation to payment arrangements?
I have a client that they've actually recently asked me for security. I've also offered security where they've refused it, where they've then said, no, we won't take security after asking for it. So they have a security area that obviously all the properties go to, or the assets go to, and they assess that and determine whether it's appropriate to take security. So I have recently been asked. However, if you don't believe that security, you're able to offer security, you just need to provide them reasons why security is not appropriate.
Yeah. Okay. And I'll ask you one more question, but before I do that, I'll open it up to now any questions that anyone might have, and I know I've got one for you, Norman, which I'll ask in a minute. But anyone who's got questions, just push them through the Q&A and chat function, and we'll deal with them after this last question, and that is, what happens when it all goes wrong, Josie? What do you do? Can't get an arrangement,
Can't get an arrangement? Gee, yeah. To be honest, I've never been in that position where I haven't been able to get a payment arrangement, unless, of course, the client simply can't afford it. And if the client can't afford it, well, then they see you, Steve, because essentially it's either you can afford it or you can't. It's as simple as that.
Yeah. Okay. And so that's where that provision of that additional information, like cash flows and budgets, do they ask these days for a list of your creditors and debtors?
Absolutely. A list of debtors, list of creditors, profit and loss, balance sheet, financial information, financial statements for the last 2 years, financial forecast as well. They'd like to know what you think your company is going to do, and they request that from your accountant. So yeah, no, they're definitely scrutinizing all the financial information these days and being very careful about what they approve. So people may find it very difficult to get a payment arrangement. That's why they should see me.
So say with the provision of accounts receivable debtors information and maybe bank account details or bank statements and things like that, is there any risk that when that information is provided that they might issue a garnishee notice on those debtors and bank account?
Yes, there's definitely a risk of that happening. I think the key is that's why the relationship you have with the ATO officer that's receiving that information is vital, because it's during those conversations that you must make that ATO officer clear that issuing a garnishee would damage the reputation of your client, and that negotiations with the ATO would fall over. Yeah. So in order for the negotiations with the ATO to continue as well as they are, to not withhold from issuing a garnishee to any of the debtors.
Yeah, and that's why, it's a really specialised area, this, in terms of dealing with that particular creditor. So, so I'll ask, Norman had a question for you, and that is that does failure to comply with a payment arrangement result in automatic personal liability?
No, not under normal circumstances. Obviously, a lockdown DPN issued is never invalidated. So that will still stand, and the ATO will always be able to pursue that director personally. But no, if there's no DPN issued and that person's just in a payment arrangement, that liability does not become personal when if they default on the payment arrangement.
We've seen some, not very often, but every now and then we see with a liquidation, occasionally the DPN will be issued after the company's gone into liquidation. It's be a lockdown DPN, presumably at that stage. But it doesn't happen very often. But do you want to comment on that at all? You ever seen that?
Sorry, Steve, can you ask that again?
Yeah, so a DPN being issued after the company's actually been placed into liquidation.
I have seen that. Because once it's been liquidated, a DPN has to be addressed by the liquidator. I've never been able to manage that situation. Yeah. Because as I said, the only person that can is the liquidator. So this is why you've probably seen it. Yes. Because once your client receives a DPN, they go to you, and it's you that can address that. So while I have seen it, the ATO are able to issue DPNs after a liquidation.
Yeah, indeed. Chantel's got a question. What are some tips to negotiate a long-term payment plan?
So the tips, it's all about your discussion and your application with the ATO. So it's about so obviously you've got to understand that ATO officers do not really understand business. So it's our role to really educate the ATO officers, especially about that particular business that you might be negotiating. So get into detail, as much detail as you can, about your client's business, and paint a picture, make it relatable. So yeah, all those things will really help you with your application.
Babu's got a question. What are the key points to be provided to the ATO to convince them for remission of interest and penalty? Can a client reduce principal ATO debt without insolvency or small business restructure?
Okay. So we covered the second part of that question before. So the answer to that is simply no. You can't reduce the principal debt without an insolvency event. The first part, key points to providing for ATO to convince them for a remission. So the client just has to have extenuating circumstances that are beyond their control. Essentially, if you can convince the ATO that they do, the remission application will be considered.
And the second bit is, yes, that bit about the primary tax debt can't be reduced without a formal insolvency thing. There's a comment that was made, just to go back to that question that we had about director penalty notices being issued after liquidation. one of the comments that was made is that they can even be issued after the company's been deregistered.
I saw that. Yeah, I saw that. How interesting is that? DPN.
Yes.
I'm pretty sure that Christopher's right. That is possible, but I think it's the garnishees that they can't issue. They can't issue garnishees if it's deregistered. They have to re-register the company in order to issue garnishees.
Well, I'm not quite sure if the company's been deregistered. I'm not quite sure what they would be garnishing, but anyway, who knows?
Yeah.
Michael, a question: is the DPN which is issued after the date of liquidation or administration effective against the director to whom it was issued, given two of the options available under the DPN, VA and liquidator, are no longer available to the director?
That's your question, isn't it?
Yes. Well, I think again doesn't it go back to the thing that it can be issued after the date of liquidation, which means it would fall on the director. I would have thought.
Yes.
I think
Yes.
that's the answer to that question, Michael.
I think it's the lockdowns that can be issued after liquidation.
Yes, absolutely.
I don't think it's the standard ones.
Well, the standard ones require, give you that
That's
option of liquidation. If it's already in liquidation, it would be the lockdown. I agree.
Yeah, so yeah, I think it's the lockdowns that can be issued. Yeah.
Any other questions from anyone? Okay, well, there's no other questions. We're just on time anyway, which is great. Josie, look, thank you very much for sharing your knowledge with us today. We totally appreciate it. And I think that over the next 6 to 12 months, I think you're actually going to be pretty busy, I suspect.
Yeah, I think so too.
Yeah, I think there's a bit of activity that's starting to be stirred up. And thank you everybody for attending today, and enjoy the rest of your day.
Thank you. Thank you, everyone.